Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren.
Hey everybody.
Lauren, I know you had an interesting title today. I think the title is going to be Decisions. And,
oh, okay, yeah.
And I found it fascinating, and why don't you share what you found out?
Yeah, so I've been, well, in my personal finance classes and also my investing classes, I've realized that I've been spending more and more time in these classes talking about things like behavior and decision making. And particularly in my personal finance class, which is less about investing and just about personal finances, we talk about decision making. Recently, I read a really interesting article that put together a whole bunch of studies that people had done about decision making, and some of those results were very surprising to me. I had not realized that this would happen. So, for instance, here's where it started to get surprising. Researchers had known for a long time that there really is such a thing as willpower, and I think we kind of know that
sure.
That's there, and that if you have to spend a lot of time resisting temptations, then your willpower gets depleted, and then it's easier for you to fall into temptation or to just sort of shut down and do nothing.
That's why the diet industry is a multi-billion
right,
dollar industry.
That is exactly correct. So I think we've all kind of known that. But what was really interesting is that some researchers stumbled upon the fact that even if people were just making decisions, even if it had nothing to do with resisting temptation, their willpower still got depleted. So they decided to run with that, and they had a bunch of they did a control group, and so we'll call one group the deciders and one group the non-deciders. And what the deciders had was these researchers had gone to they were students and they had gone out to a secondhand store and bought a lot of interesting stuff that students might want. And they said, okay, at the end of this project, you're going to go home with one of these things that we bought. It was like a T-shirt or a candle or all kinds of stuff. Okay, so but the deciders, that group, had to spend a lot of time dealing with, would you rather have a candle or a T-shirt? Okay. Would you rather have a black T-shirt or a red T-shirt? Would you rather have, just all these decisions. The non-deciders, on the other hand, in that group, they were merely told to observe all the different things and tell us, have you used these things in the last 6 months?
Okay.
So
they didn't have to choose anything.
They didn't have to make any decisions. Okay. They just had to write about, or just tell the researchers, have you used any of these things? So at the end of they did a fairly typical test of willpower. They had people put their hands in a tub of ice water and see how long they could hold it in before pulling it out.
So we're talking about physical willpower now.
Yeah, physical willpower.
Yeah.
The deciders held their hand in for an average of 28 seconds. The non-deciders held their hand in for an average of 67 seconds. This is a pretty this is not explainable by mere random chance, and this is a big difference. And so they repeated this experiment over and over again in a variety of different settings, and with a variety of different things that you had to do at the end of the experiment to see what your willpower was at. Okay. And the same thing kept happening over and over again. Even if the decisions are trivial, people who had to make a lot of decisions, their willpower got reduced. And then, of course, they did this same thing with buying. So they dealt with people who were buying expensive custom-made automobiles, and they would have to decide on the colors for all sorts of different things.
All the options.
Yeah, exactly.
Right.
And what they found was that the people who had to make, there were 56 different colors that you had to choose from, people who had to deal with that decision first and deal with all those different colors, they reported they were the least happy with their shopping experience, and also they just gave in the quickest. And what I mean by gave in is they'd eventually just select the default option.
Okay.
They just say, well, whatever, no, just give me the default option. And that's one of the two things that happens when your willpower gets depleted. Either you just shut down, or you act recklessly.
Or make bad mistakes.
Yes, exactly. Right. And then the final experiment was one where they had a bunch of people look at computers, right? And the first group of people just had to study the different computer parts. The second group of people, they were told what kind of a computer somebody wanted, and they had to look at all the different specifications and put that together. And then the third group of people had to decide what kind of a computer they wanted. Okay, and so they wanted to see who had the toughest time. The people who had the toughest time were the people who had to make a decision about what kind of computer they wanted. People who had the easiest time were, of course, people who just had to study the different computers and know how they work. So, to me, when I read this article, I hadn't known all this stuff about how decision making actually depletes your willpower and makes you, and I thought that there were some really obvious consequences. I mean, the first thing that came to mind because I had also just been thinking about financial advisors who have been selling their clients out, recently.
Right.
Is that you and I set things up when we do the portfolios as the client determines what the portfolio they want in terms of their risks
Right.
and expected return.
Right.
But after that, it's all automated.
Right.
We don't keep making any decisions about that.
Right.
And that prevents decision fatigue.
So this past month we've had these market corrections, huge one. In
Oh, yeah.
We know there's no decision for the clients to make because
Exactly.
even though the TV is telling them to make decisions.
Right, yeah, exactly.
Right.
And I think that this ties in with the fact of why there's a lot of stories out there that a lot of investors just are giving up.
Right.
And when they give up, they either act recklessly, which in investing, recklessly usually means sell whatever you've got. But it only sometimes means, invest in something crazy. But, it ends up being the same thing either way. Or else they're just shutting down.
Right.
They just don't want to deal with it anymore.
Right. Yeah, I've heard a lot of that. Like during the worst times of the stock market, in a way they shut down is they just stopped looking at their statements.
Right.
They ignored it. They just they might have went to cash.
Right.
And just I can't deal with this volatility.
Yeah, exactly.
So
I
yeah,
think a big part of
you
that
and I
is
have had previous episodes where we said that the most successful investor makes the least amount of mistakes.
Right.
Over the lifetime of investing. And
Yeah.
so this could be a strategy to help them become more successful. Is to take away some of the decisions.
Yeah, and then a few other things that I've been really thinking about. A lot of our tax clients, especially our small business owners, this article really explains in great detail why it is that it's so important to delegate things.
Right.
And why it is that you don't want to make every single legal decision and why if you have really big decisions to make, you should really sit down and work on them first thing.
Right.
When you're rested
Right.
and everything
Right.
else.
And in your business, and this applies to our business clients, if we've found that, and we've done this in our own business here,
Yeah.
creating more systems, more automation, using automated billings, things like that, that reduces the decisions and it reduces the mistakes.
Right, exactly. Yeah, and then just in a personal life, why it's so important to develop habits.
Right. Okay. Well, that's very good. So thank you, Lauren. That's a very interesting study, and I can see how it applies to our business clients and, of course, investors and having a successful experience. Well, thank you for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.